Alrighty, but yeah, I'll go over the New Zealand dollar trade.
Thank you very much indeed. Thank you
Yeah,
for
yeah,
that.
because yeah, we'll go over that because it was nothing overly complex as to why I went short, man. There was no, I didn't go through a significant thought process to enter the trade. The only thing that I had going for me for that trade were simply the fundamentals, and that we did get that close underneath that key level, the 67 round number. So what I did when I made it very clear that I wasn't looking at it from a shorter term perspective. It was much more of a swing type of position. So I was taking all that context strictly
I didn't see a break. I didn't see a break of structure or the directional impulsive move.
pretty much, man, pretty much. So I was just taking all of my analysis from the context of the daily chart. I didn't even go into the lower time frames to time and entry. So what I had did when I saw that bearish daily candle the day prior close below our 67 level, it looks like we're getting a peak formation. Remember what we talked about peak formations in the other day's training? It looks like the move is exhausting itself. We might hit a blow off top. We might get some a shakeout type of market. Also, the fundamentals, the dollar was gaining strength. It just made sense to short it. So I entered as the market closed, maybe an hour after market close. I just executed a short. I had my stop above that day's high, and then I targeted where I thought the liquidity was going to be, and it was underneath those lows where it literally just fucking breached. I was expecting it to take out the 66 level, and it did just that. And I made it clear that I thought it was going to take at least a little bit longer. I thought it was going to take me 2-3 days, but it happened right when I woke up.
Quite quickly. Yeah, it did.
Yeah.
Did, yeah.
So not only
I still think it's going to go up again. I still think because it was manipulated again because it didn't hit the round numbers.
It could, but it could most likely be one of these other I mean, things don't go in a straight line, so maybe more buyers in profit are going to get cleaned out because they should have taken profit at this level right here, right? So for those who are still in profit, you're right. Maybe it'll do something like.
Yeah, I think it might clean out those fucking lows, bro.
And then come back here and then do something else. Who fucking knows? But
who knows what it'll do? Yeah.
But based off that information, we now know to look for short opportunities. We know that if we expect it to go as far or even below the 64 key level, we also know that there's liquidity there. So it's a good place to target. It's a good place to exit our positions in the event that we do take short.
See, I'd have put my green dotted line along there.
Right there?
No, you see the right hand side of the chart? Yeah.
Right here?
Yeah. Between those two high points.
Oh, there is a 66 round number there.
No. Yeah, you gotta go right. Gotta go now. Go up. No, go up. Now here, there to there. Yeah.
Yeah, so I mean, this is another place where if price comes back up, maybe it'll be interesting for us to look for some type of short play.
Yeah, I was thinking of a trend line there.
Going down?
No, I was thinking you were trend. Yeah. So I'm just waiting for that to break.
Oh, and then come back up?
Yeah.
Yeah, I'd be obviously it's probably going to do that to fulfill more orders, so short sellers could step in. But
your timing could be tough to get.
Yeah, to try to capture long on that. So just I do caution and be careful in that, because when you get a steep, volatile move like that, that is the impulsive move. Remember, guys, you cannot make good decisions or execute high quality trades when the market is fucking moving. You got to wait for it to exhaust itself, pull back to a key level, minor level, a good level, a range, create the range, and then we look for positions there. But the market already moved. Like, I'm already out of my position. I'm not sweating. If it moves even more, I'm not sweating. I know that I want to short it. I know where we're targeting. At that point, I just need to wait for more criteria to present itself. We got to break the structure at the highs, close below the 67 key level. It's at the impulsive stage of our method. We can't do anything. We have to wait for it to kind of pull back, consolidate, maybe create a trap in that range, create the confirmed range, create the stop hunt. That's where we'll look to take the short. And then from there, the rest is history. So, yeah. I think right now, given that the dollar is probably going to be gaining some mad traction before we see it weaken off again. But who knows? Nobody knows what the fuck is going to do from a macro fundamental standpoint. But the charts tell you everything you need to know, man. So if we expect the New Zealand dollar to go all the way, maybe even past the 64 level, that means the dollar is going to be gaining strength for quite a bit of time, man. It could take a couple days, weeks, maybe by the end of this month, moving into next month, before we get the dollar just completely shit to bed. We're starting to peak closer to election day. So I don't think Trump's going to want a weak stock market, man. I know the stock market is selling off, but he wants to give the illusion that the world is fine. So in order to do that, what really matters to people in the financial sector? The market's going up. So right now, I think we're just getting that temporary weakness and a lot of risk on currencies, risk on assets like the stock market, equities, et cetera, et cetera. But I think the more closer that we near to election date, that is when the dollar, there's not going to be any demand for dollars. Why? Because people are going to use those dollars to invest into assets. So by virtue of the fact the stock market is going to pump, this is just a wild speculation. It's not accurate, but it's a good guess. And then all risk on currencies such as like the New Zealand dollar, the euro, et cetera, British pound, all these are going to move up in line with that. And that is the narrative that we were actually, when we were doing the top-down approach on the euro USD, we talked about that. We said we expect some massive upside because of what we're just discussing right now. But the more we get closer, the more as time progresses, the more clues we're going to pick off. And right now, the data is fucking shit, man. The data is getting worse and worse as the months come out. Real estate, it looks like the bubble's coming close to a pop. The stock market might have just another bit of juice before it completely collapses. So these are just little things that we have to keep in the back of our mind before we start focusing on macro plays. But the beautiful thing about what we do is we don't care to catch these macro plays. We just care for the market to reveal itself, and then we move in alongside with that. Yeah, it's hard to try to time these moves, bro. Like you get nothing for timing these moves. If anything, you get more stress and lack of strike rate because you're just trying to catch moves that are very difficult. We wait for the market to reveal itself, and dude, if we could just catch the meat of that move, all the fucking better. You don't need to try to catch these precise moments and where the market is going to turn. If we could, like hell yeah, but if you don't, it's okay. As long as we catch the meat of those moves, we're gonna make money. And that is the important element of that.
Yeah, that's I have an idea of that and how to work it out, but it's, as you said, it's so random. It can just, anything can change so quickly. You know, you get a good idea, you can understand, you know, the macro sort of fundamentals and stuff like that, which I'm quite okay with, and much better than what I was before I went with Mark. But it's still not a definite or a certain. Everything can just change just like that. It's so weird.
Exactly. Can you guys see my chart?
Yeah.
CAD yen, man, CAD yen. So right now, as I was kind of scanning while you guys were chit-chatting, I managed to pick this trade off. Okay, so this is what we're gonna do. You guys see everything that we deployed, our key levels, the 50s. I don't need to have the 50s at every fucking random point. Just it makes no fucking sense. So we got our accurate levels. We have our break of structure right here at the highs. 81, round number. Boom. Impulsive move. We have yet to get a exhaustive consolidative range up until now. This is starting to look good. 1, 2 tests. 1, 2 tests. We got a confirmed range. What are we getting here? Trap. No follow through. Sellers were not given the opportunity to take profits at the low of the range. So we can accurately assess that probably, just a crazy guess, that there is liquidity at the top of this range. All of this is a pool of liquidity. So what do we want to see? Anything like this, hell, even past the 79,500 would be a much more accurate trade. If we don't get that, if we get a, let's say a high put in, a retest of those highs, but failure at those highs, that would be a good time to take a short opportunity as well. Just give your stop loss some room to breathe. Then we target the midpoint, first trade. Then you could get out, and actually you could target right here at that low point. Or
Can you
if
zoom
you
out a
want,
little bit, Dave?
yeah. If you like, if you want to let your balls hang, you could take your first target at the low of the range, and then you could look to target this massive pool of liquidity right here. Because buyers are still profitable. Why? Because this level
It's not being touched.
has not been invalidated, has not been interacted with. So we know buyers are still in profit. And if we expect dollar gaining strength, risk on currency pairs, commodity pairs to lose value, and we can project that over the course of a couple days, over the course of a week, this is the 1 hour time frame, we could probably hold this trade for a couple days, a couple weeks, or even just run it down to target. So that is what we will be looking for. The CAD yen, simple shit, man. We don't need to complicate it. Now, maybe the reason I'm very keen on you guys taking targets at the low and being flat is because we could get something like this. We could get a breach, and then we could get it to come right back up and clean out this little pullback. We've seen this time and time again. It'll come back, clean out that pullback, and then sell off again before we get it to do that. So it's just food for thought, something to be prudent about, cautious about. But if you do take your first target, just break even and then try to see how far you could run it to the, you could target here and you could target here. If for some reason the market is moving and it just doesn't look like it's going to make that second target, just close out your fucking trade and wait for more price action to elapse. But either way, we still want to be shorting this pair. Anywhere here would be a good time to short, but primarily here would be a good time to short because there is liquidity here. And from a macro standpoint, this could be a lower low, lower high before we make another lower low. So that's kind of what I'm looking for on the CAD yen. Either way, in summary, in conclusion, we're going to look for a short play. We have everything that we need to see. This is a high quality trade. We got the fundamentals on our side. We had a break of structure. It was consolidating above the key level. Boom, break underneath a major solid level. Impulsive move. You couldn't have taken a trade around here. Maybe if you were able to catch this pullback, all the better. All the better. But 9 times out of 10, remember the markets, when you have that impulsive move, it will pull back. It should have given us a trade opportunity here. But honestly, it could have. Honestly, we could have taken this type of trade right here, but it would have been very difficult to do. I want something much more cleaner, more precise, more defined, and easy for us to spot. So now we got the impulsive move. What is the next step? Wait for that confirmed range. We got it. 1, 2, 1, 2. Nice accurate level here. Trap. Sellers getting in on this retracement, on this pullback. No follow through. Why? Because it didn't reach the low of the range. So we can safely and accurately assume that there's liquidity there. The markets are always here to flush out liquidity, orders, any profitable traders. Sellers are still technically profitable. But once we get something like this, anything above this range is fair game to sell. You are getting in at a good, accurate price. So let's just say we were to get somewhere, let's just target, let's say we get somewhere in around there. Anything slightly above the 50 minor level would be fair game. If you take your first target at midpoint, you're getting a solid 1 to 2, man. Down at the lows, a 1 to 3.22. And even further down, that's almost a 1 to 6, literally. So you make those independent decisions at that point. These are just some ideas, food for thought, things you could play with. But what I'm going to be doing is I'm definitely going to take my first target down here at the 78,400. Get a nice 1 to 3 there. Oh, you know what I'm going to do? No, if that trade comes, I'm definitely taking my first target at midpoint. If, which most of the time it does, not all the time, if we get a pullback, I will add to my position as well here. Once my target is made, break even. So I got 2 more runners. I'm going to take my first target there again and my last target there, see how far I can run it. So that's what I'm going to do because I really think that we can milk this trade. So remember, first 2 targets out here. Target midpoint, target the low of the range. Once this, if it doesn't get made immediately, but it pulls back, I will be looking to add again. Same risk.
And then you'll just go for further excursions.
Exactly.
Go for the long ones.
Exactly. So easy, man. Easy stuff. Piece of cake. Nothing overly complex about this. So
the trap is what I thought it was, where it's a pool of liquidity at the top of it. It is very, very important.
It is very important. It's unrealistic to think that you'll get it all the time, but if we can get it, it should be something that you really, really hone in on getting because it is very, very important. So nice, accurate level. Nice little tight range. Little extension to the range. Sellers are very profitable here. Sellers are profitable here. Also here. Anything above here.
They get some wine.
I'm sorry?
Sorry, I'm going to get some wine.
Get some wine.
Get some wine?
Yeah, which I'm sure I've got a bottle of blue stuff to hate, but I like wine now.
That's it, man. Hell yeah, man. Every day is a toast. Every day is a celebration because it's just beautiful, man. The thing about the markets is that if you're really focusing on your craft and you're doing your due diligence, every day is just a step forward of getting better. And when things start to make sense, it's just fun, man. This stuff is fun. It should be easier over time. What's the point of having a skill if you're not getting better at it at all? You know, I would not be in the financial markets. I would not be in this business if I knew there was no edge in it. So, yeah, easy. Did anything of what we just discussed make sense, guys?
Oh, yeah.